FXPROFESSOR here, and we're going to have a very interesting video today. I'm going to try and keep it short, but there's going to be a lot of things that we will be discussing. So I believe we are entering a very interesting stage in the market. We have had a nice dip to buy with the Trump tariffs, and now the market is going to become very interesting again. Because we have interest rates and all these things coming up. So let's take it from the beginning. First of all, I just asked ChatGPT to give me the AI news interpretation of what is happening in the markets. And that's another thing I want to do today. I want to discuss with you how you can get information from AI, from Google, from sources, from all these publications that you're probably following, but also how you can do your own screening and to understand what's happening and to try to make the best out of the situations. So we'll get here. I just asked ChatGPT to give me an update about what's happening with interest rates, with the things that are in the market, to focus on Bitcoin, on Tesla, indices, and so on. So it starts, and it's nice that it starts this way with a macro and rates. So federal funds rate remains 4.25 to 4.5. Good jobs. So if there is a lot of jobs, remember the Federal Reserve has a dual mandate. I keep repeating this, but you need to understand it. So for those who are not aware, the Federal Reserve has two jobs: maximum employment, so needs to create jobs. We have jobs are okay, and stable prices. Now, stable prices means inflation and monetary. We follow inflation, we want to control it. Monetary policy, interest rates. When there is good employment, like we have now, just to get to the point, there is good jobs. So the Federal Reserve is like, hey, we have good jobs, so I don't have to reduce the interest rates. So a lot of people are wishing for bad jobs reports in the US. So there is no jobs. You have to move the interest rates. Now, one of those people is Donald Trump, and he's fighting with Jerome Powell because Jerome Powell is taking it super slow and easy. And that's why very soon I will be updating this, which you see I put a lot of color and info in this to see how it goes with the interest rates. This is a very interesting post. Nobody liked it, 17 people only, but this is important stuff, guys. This is stuff I follow and it makes a difference, and you should too. Okay, so read this post and see how it went with interest rates and when we actually pumped. This is Bitcoin, and when not. Okay, so we have all these factors, and we have the tariffs and trade. Now Trump is making new moves yesterday with Japan and Korea and so on. So we have the tariffs going on, and the Trump factor is a factor that love him or hate him. He's Mr. Volatility. So the last time we had a big volatility, we will get there. We'll see how we actually bought the dip and how I posted ideas about the Nasdaq or the DAX and so on. We're gonna get to those in a minute, or let's do it now. Okay, so we had Nasdaq. That was the idea. That was the max pain level. Click on play. Beauty of trading view. You can see what happened. So we got the max pain level. That's what the only idea I posted on Nasdaq. I'm updating and posting new ideas for all this week. Okay. So we had Tesla, for example, which I posted after a year, and boom, it was a good time to buy. But you see, still struggling. Donald Trump versus Elon Musk. That's another episode. The beauty of it, the DAX, guys. We call the new all-time highs, make the index trade again, and boom, perfect entry. Okay, and the chart works. You see, simple levels, they work. So what's happening next? We reached that target. For me, that was the best trade this year. So guys, I'll tell you something right away. Okay, I'm not going to BS you. I've been posting crypto for the last 3.5 years, 3 years. I'm in a transition period. If you have managed to figure this out from my posts, that used to be 90% crypto. And that's why lately you see a lot, like, even I try to get you to bonds and other things. And we're going to go through all this. I don't care anymore if the video is going to be 15, 20 minutes. It's for those who want to watch it. But to get back to the process and the logical thinking, okay? We had the tariffs, we have the Trump factor. We had volatility. Markets recovered. Okay, especially the indices. So equities are doing well in Germany and in other places as well. Crypto is a little bit stable. Bitcoin holding over 100,000 and so on. Precious metals are doing really, really well with platinum. I gave you a platinum long at a good time as well. So anyway, let's build the conversation up and the thinking up from there, and let's see how we will focus versus how one would focus with the information that is out there and trying to make the best out of the fundamentals. So during the last dip, we did what? We used the chart, guys. We used the chart, and you see, I have the simplest charts in the world. Okay, I know not everyone can make them nobody can make them how I do, but maybe you can do them better than I am, but I follow my charts, and so do you. Also, we looked at other things like the treasuries, and these are struggling. This is the US government, and you see this is still struggling. Okay, so the faith in the American, read this, very important. uh, but on the other hand, we have LQD, quality credit, and this, guys, a perfect pump, So this is much better. So quality credit and junk bonds, the risk appetite, we had explained here why it's on support and it's back. And you see, the risk appetite is back. We did have a proper rebound, and we did have a proper rebound in the markets. And of course, the best trade, and forgive me for bragging, I only show you the ideas that went well, yes, was NVIDIA. Okay, so we had the re-entry there, and guys, it's just, it's just like beautiful. So what was that? And what was the fundamentals then? That was Trump, the tariffs, Trump playing the crazy man. Even worse, the Chinese and the rest saying, hey, we know you're bluffing, you pretend to be crazy. Yeah, we're crazy too. So things got heated up. Okay. In the meantime, we also had another situation, and that was the whole Iran versus Israel thing. So we had the whole Middle East tension thing, which, okay, we did quite okay with this. Uh, Oil was the best trade, and for me it was such a pleasure, because the people that they were wishing for war and going long on oil, they ended up getting smashed, and that's beautiful news. Okay, if you lost money on this one, well, it's the only time I'm not gonna be sorry for these people. Now, we have here a mix of different assets, and we need to start with the dollar. So I'm gonna start with the chart of the DXY of the dollar index. So we had called it the year of the normalized dollar. We have been going short ever since that level. I think we probably had some kind of like very close to perfection. And then the chart. The chart is the treasure to the is the map to the treasure. Forgive me. The chart is the map. Okay, so we follow the chart. We read, we analyze, we think. The market is anticipating that there will be rate cuts, so things pumped. Trump showed that he's bluffing. The situation comes second, always. The chart comes first, according to my analysis. So we follow the chart. Okay, and you see the chart has been working well, has been working really well. The same way that here back in 2020, everyone was going, dollar is going to go to 80. No, that was the time for the king to show some strength. That's for those of you who have been here for a while. So we follow the chart. We buy on support, we go short at resistance. So what is dollar index showing now? Well, dollar has lost a lot of steam. This has been our target, the 94, okay, to 95 era from the beginning. Same chart as it has been for a long time, guys. Okay, it's the same simple chart. So now we're looking at the Fibonacci, but as far as I'm concerned, the dollar has already lost a lot of steam. So I wouldn't be surprised. Maybe I would like to get back on dollar short at 100.965. This remains my target, but this trade is already chewed up. The dollar has lost a lot of steam, even though we didn't have rate cuts. So this is telling me something from experience. Guys, maybe we're not going to get rate cuts fast, okay? And just so that you are aware of the news, Australia, today, did we have a rate cut? Well, the market was anticipating a rate cut. They didn't get it because of inflation. So you know what they say: the sun rises in the east. So we need to be careful with our expectations, and we need to price in what kind of rate cuts the market is anticipating and has priced in already. Okay, so that's one thing that's going to keep us busy. Again, I'm going to update all these charts one by one. So we're going to go through everything step by step today and in the next coming days. And rate cuts will affect Bitcoin. They will affect even more the altcoins. They will affect everything in the market. Okay. So about the DAX, I had chosen the DAX because I looked at the charts of different indices, and I liked the DAX, which, you know, they don't have cheap Russian oil, they have all kinds of problems and so on. But you guys, you see what happened? A chart worked. You know, interest rates in the European Union a little bit better than the US, and it happened. Okay, so that was a good trade. We hit the target. Right now I see some support. You're gonna get an update for this chart as well. Similarly, we also had the Nasdaq. We showed Nvidia and Tesla. Okay, so the market had a nice pump, which started when the fundamentals and the Trump situation seemed out of control. Right now we have a period which is calm, okay, and we need to be extremely cautious and careful going forward. I showed you the dollar, which is what I emphasized on, and you know, you can also look at gold and silver. We had nice ideas too, especially gold. I would be taking profit on gold, guys. That's something I want to tell you today. Okay, just on this video, I'm going to update all these posts. But what I am here to tell you today is that we need to be careful going forward. I'm starting to get worried that this thing here, the Trump versus Powell thing, which I encourage you to look at the history always. I put this here for you, showing you what was said, you know, and what happened with interest rates, and you can see what happened with Bitcoin, which is the best reflection for this kind of exercise. I was in between Bitcoin and Nasdaq. I think Bitcoin is more interesting, okay, because it's a little bit like Nasdaq plus crypto plus a little bit more plus a little bit of gold. It's a perfect mix. By the way, Bitcoin is the only asset that it's my favorite asset. You have to know that. So read this and see what happened. Go through this, read it as a comic, or read here the text. It's gonna be important because that's what we're getting next. My expectation is for volatility. My expectation is that things can become cloudy. We have equal possibilities to see all these things pumping hard if the tariff things gets under control and the rate cuts come. But we have another 50%. It's a 50-50, guys. Like, I cannot tell you what's going to happen. We don't know. We need to go step by step. We need to follow the charts, and we need to find the opportunity. So out of all the charts, we need to look at the opportunity. For me, the opportunity, I think, could be here. It's definitely not in the dollar right now. Okay, so we look at the charts, and again, we're in a club with a lot of beautiful ladies, so you can choose the one that you like. Okay, so unless you're married, so think about, you are in the supermarket, there's a lot of I don't know, there's a lot of soft drinks. You choose the one that goes better with the seasonality, with the situation, and so on. So I'm going to close with Bitcoin real quick. We leave the most interesting, the most on demand, the favorite one for me is Bitcoin. So we had this chart, which it's the same levels I drew 2, maybe 3 years ago, ever since the first where can Bitcoin go. So uh, now this chart, guys, 1 rejection, 2 rejection. We are still struggling with the third one, and we have a set 1, 2, 3 again. So it's 1, 2, 3 here. I'm saying this again and again. So that's the key level, 115,000. Over that level, we have a massive breakout and pump, but this is a lot of FOMO and a lot of wishful thinking. And even me, as an experienced trader, I can tell you that emotionally, I believe Bitcoin is gonna go up, and I'm hoping to see this huge breakout. But at the same time, I know that the market owes a third and decisive check there. And I'm going to say it's 50-50 that this is the end of the cycle and we go lower first, okay? As low as 64,000. I'm sorry if I'm scaring you, but the chart is telling me be careful. My optimism, I'm wishing for this, okay? Now, as far as altcoins go, we'll show Bitcoin dominance, I think, and we close for this with this. So this is a chart that we have revisited again and again. We had the breakout over these 2 resistances here, okay? But the massive level where all the alt seasons start is at this 72.9, and I'm gonna say 71.30 to 72.9. That's the biggest area to go strong into alts and so on. I'm going to leave you with my personal experience and the new me, because as we grow up and we experience things, we learn. I'm completely turned off with altcoins. So I'm completely turned off, guys, for so many reasons. And I promise you, I will revisit why and take you step by step. But we all like altcoins. The market is dominated by meme coins, is dominated by bad factors. So we're gonna visit those as well. Right now, we are not very optimistic about this, as it looks like for another time, Bitcoin will need to see these Bitcoin dominance levels over there before we can get too happy about altcoins. And especially for altcoins, we need rate cuts, okay? Because that's high risk. You see, Nvidia pumping and Tesla doing okay despite all the problems that Elon has. We see the markets recovering. We see the DAX doing great. We see opportunities flying all over the place. If you got on platinum, platinum had a what? Had a fantastic. What is it? Yeah, 47% year to date. That's what ChatGPT says anyway. So it's about right. So, but we have the dollar index that dropped and we didn't pump and we didn't have the rate cuts. And we have a lot of factors that they're telling us that the market is going to be volatile and we need to be on top of the charts. So in the next coming hours and days, we're going to revisit every chart. But at the same time, I must admit, but I'm a little bit turned off with you guys, with the audience, okay? Because we all have expectations that might be too high or whatever, or there is no patience, which is a good factor, because when this happens and things go quiet, usually we have good things happening, okay? So that's a good factor. But you should really take a look at this, because that's what's gonna be happening next. It's gonna be Trump and tariffs and the Powell a lot, and at the end of the day, Powell decides, not Trump. Maybe Trump can push, but it's all these things and the situation that the dollar index has dropped. The junk bonds, they have rebounded. That means the risk appetite is back and breaking higher, but altcoins are not pumping with it. We had the credit stress, so that one also on support. And of course, we did go well, but we are approaching slowly some key resistance. That might be the most important level, by the way, in a chart that you don't think it's important. It doesn't matter. We're gonna go step by step. We will revisit these things, and yeah, I'll try and keep you posted. And I'm also gonna try to do the best for myself. And there is a transition this year, guys, from 90% crypto to something like 50 50 crypto and forex, stocks, other assets, etc. That's it from me. 20 minutes and 25 seconds, it's enough. Well, if you lasted that long, it means you're good.